Coinbase shares popping after surprise profit for the quarter and a massive beat on earnings driven by better than expected trading volume. You can see shares are up 4% right now. Coinbase and Bitcoin seeing a run up into this report, both up more than 20% month to date. Joining us now exclusively before the analyst call is Coinbase CFO Alesia Haas. Alesia, it's great to have you on the show. Welcome. I do want to start with that massive EPS beat that was driven by better trading volume. Walk me through what you saw in terms of activity in the quarter and how it is carrying over now here into the beginning of 2024.
Well, thanks for having me, and thanks for the first question. Yes, we've always said that crypto is a volatile space, and when we see increases in volatility, it has long attracted more trading volume to our platform, and that's exactly what we saw in the late fourth quarter. Sparked by the Bitcoin ETFs, sparked by a belief that the macroeconomic environment would improve in 2024, we saw more growth, and we saw that across the platform on our retail institutions, and we saw excess growth in our advanced trading product, which drove to that strong trading volume. And as you can see with the unit economics of our product, when we see strong trading volume and activity, that translates to bottom line growth. So we had a strong fourth quarter with $273 million of net income in the fourth quarter. That brought us to $95 million for the full year 2023. And we posted nearly $1 billion of adjusted EBITDA in 2023 and really met our financial goal where we told you in the beginning of the year we wanted to produce a positive adjusted EBITDA in all market conditions. And we're really proud that we delivered 4 quarters of positive adjusted EBITDA this year.
Yeah, well, I mean, you basically beat on just about every metric from what I can tell here, except maybe take rate being a little bit softer, a little bit lower. Walk me through what that means in terms of trading mix and whether that should be translated as fee concessions or something else.
We did not change pricing in Q4. So in Q4, and we've shared this for many quarters, a lot of the results of our fee rate is just the mix shift on our platform. Who traded what product in the quarter? And so in Q4, when we saw higher volatility, we grew simple trading, but advanced grew more. And so the growth of those advanced trading customers and the volume per trader led to the fee rate coming down on average in the quarter. But it's purely mix shift, just math, no change to fees in the fourth quarter.
We're a little over a month into all of these Bitcoin spot ETFs trading. We've got Bitcoin trading at a more than 2-year high and other cryptocurrencies surging as well. But specifically around the ETFs, on the one hand, you're custodian for a majority of them. And on the other, at least according to a number of analysts, they could compete for some of the investor and trader activity that traditionally has gone to Coinbase. What has the impact been so far?
We've seen crypto come up across the board, and it's largely been driven by the Bitcoin ETF excitement and then the momentum. So when we look at the ETFs in particular, we've seen net $4 billion of inflows into Bitcoin ETFs. This makes it one of the fastest growing ETF categories that we've ever seen in the history of ETFs. It's now surpassed silver in terms of total size. We're the proud custodian now of 90% of total ETF crypto. And that's really benefited our platform directly. But what I would say is we've seen growth writ large across the space with this excitement. More people are now getting into crypto. People are excited about the asset class again. And we've seen growth in our advanced trading, as well as in the institutional platform, which really is supporting the Bitcoin ETFs. So it's been good for the industry, and we've seen that momentum carry through now into the first quarter.